from holidays and the market welcoming you back again with open arms.
It's a fantastic way to come back from holidays. And market volumes were back from normal, indicating a lot of the market was back. It was a $5 billion day, and it's the first time we've cracked that $4 billion mark in 2013, if you strip out those days which were related to derivatives expiry. But a 1.1% gain and the 9th consecutive day of gains. We haven't seen a winning stretch this long since December 2004, and indeed if we do see a gain tomorrow, that would be the 10th consecutive day of gains, and since 2000 we've only seen one of those, and that was in 2003. So we could be breaking records throughout the next couple of sessions. One of the things that we have seen in 2013 is a shift away from bonds and into equities. It's mathematically impossible for bonds to return the same amounts that they have throughout the last few years, and that's because bond prices rise when yields actually fall, and with yields in most of the developed nations like the US, Japan as well as Europe very close to zero, well, investors are cottoning on to the fact that equities may be the place to be in 2013 compared to the bond market. If we have a look at technically, we've seen a fantastic run for the Australian market so far. We're above that 200-day moving average, and not only that, that 200-day moving average slope is positive, so that's a good long-term signal for longer-term investors. We have a look at our resistance level. We're coming up to a big one, and that's the 50% retracement level of the low that we saw in 2009 to the high that we saw in 2007. So that's from 3,120 points up to the high, the all-time high for the market, which is at 6,851 points. So that 50% retracement level that we're watching very closely is at 4,986 points, and we're coming up very close to that. Also, in terms of technicals, the market is looking oversold. In fact, if we have a look at the one-year chart for the Australian share market, we just have the RSI down the bottom here, and the RSI has just gone off the charts. We're seeing a reading of about above 80, and that really indicates that the market has been overbought. But this type of signal really only occurs in bull markets. In fact, they don't really occur when the market is falling, and it's quite a bullish signal. We have a look at the last few times we've seen a signal like this on the RSI. We really have to go back to 2009 when the market was rallying hard, and then back to 2007 to see signals like this. So if we have a look at a longer term chart of the Australian market with an RSI on it, the last time we saw that was in 2009 when the market rallied off the lows, and then before that, the last time we saw that was through the rise that we saw in 2005 to 2007. So while we are seeing momentum quite strong and looking overbought, this type of signal really only occurs in bull markets. A great day for the Australian market.
Do you expect the trend to continue with these banks?
I think with the banks, what you are seeing are high yields, and one of the reasons why Commonwealth Bank looks so attractive in early 2013 is that it's the first out of the Big Four to pay its dividends. It pays its dividend in February, so no doubt that we will see some support for its shares coming up to that dividend payment. But I guess a broader theme for the Australian share market this year is the wealth effect. We've seen the Australian share market with a fantastic run. We're now in the 10th week of gains out of the last 11, and what you start to see is a bit more confidence coming in when we do see this wealth effect, and I guess wealth of Australians increasing. That flows into some of the cyclical areas like the discretionary sector, and I guess some of the areas like also media as well as market related areas. Computer shares been doing well. We've seen wealth managers like Perpetual as well as Platinum Asset Management doing well in 2013 as well. So I think while the Australian market is hitting these highs and we're having these big days in terms of consecutive gains, we start to see a wealth effect into those cyclical areas of the market. We have a look at what drives the bank, well, business banking as well as home loans, and when people feel wealthier, they feel a little bit more confident in terms of housing, in terms of spending money. I think we've really started to see that in 2013. One of the best areas has been the consumer discretionary sector, which is up by 16%, and information technology, which of course is dominated by computer share, which is related to market activity. We've seen Myer today gaining 4.8%. We're seeing Pacific Brands today gaining 5.9%. Premier Investments up by 4%. So those retailers really making quite a strong comeback in terms of wealth managers. Platinum was up by 4.1%. We saw Perpetual gaining 2.7%, and the media companies have seen 10 up by 3%, and we've also We've also seen Toll Holdings, which is seen as a bellwether of the economy, up by 2%. And this is a trend we've really seen throughout the whole month. So altogether, I think the wealth effect really supporting the cyclicals, and the cyclicals doing extremely well in 2013, really led by some of those discretionary, media, as well as market-related stocks.
Jeremy,